Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, and it is the 22nd of December. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. I want to just remind everyone that this would be the last webinar for this year, so just please be aware of that. Next year, we'll pick up probably on the 2nd, but we will pick up on GoToWebinar, but we're going to be transitioning through to TradingView.com. So just over the first few days, I'll help with the transition to TradingView, and then what will happen is we'll cease the webinars on GoToWebinar, and we will be continuing them on TradingView. All right. I'll the high risk investment warning on for a few more moments. Hello, Kim. Good morning to you. Good morning, David. James, welcome. And thank you, everyone, for signing in this morning. There is actually some important news out today. We're going to get the core PCE, so we'll get the inflation numbers coming through. So just be aware of that. That is going to be at 3:30 p.m. ZA and 1:30 p.m. UK. All right. Good morning, Raj. I'm just going to bring up our market commentaries disclaimer. All right, and we just want to see what's happening with inflation. Still very much a focus. The CPI numbers seemed a bit sticky. Let's see if the core PCE reflects that, or if there is moderation there. What we'll be doing is referencing TradingView and MarketScope. Hey Mia, good morning to you. We'll just go through to TradingView. This is the real rate. It looks like we kind of analyzed here with we've moved out of this old territory. And I think that's encouraging. It just means, in my view, just takes a little bit of the downside heat off of a key market driver. So maybe a little bit more moderate, but the fact that we've come out T level. Let's just take a look, see how the US dollar is acting this morning. I'm going to start off with the weekly. Okay, just bring up the main template here from MarketScope. So the dollar showing signs of softening here. We're below that 30-week exponential moving average. The 30-week exponential moving average, importantly, pointing down. So we're using that as a directional filter. And the RSI 50 going through to daily top. We are in zone. It's a bit messy, isn't it? We are in zone 3, so we're in the weak area. And what we can see is that there is a bit of blue that's materialized today. So potentially a rally in a downtrend. Just remember that PCE number coming out is going to be an important number. It's going to be driving the market. I'm just going to go up to the hourly chart here. So that was the 15-minute. Okay, and what we can see here is potentially a 1, 2, 3 pattern. What I mean by 1, 2, 3 pattern, 0.1, 2. Okay, so here's 0.1, here's 0.2, up to 0.3, 3, and now it looks like we'd be rolling over. Okay, so what we want to do is we want to keep an eye on the triggers to see if they get pulled. The first trigger is imminent. It looks like we're going to get the crossover here. We've got another, this is the hourly, we've got about another 11.5 minutes, and then this candle will close, and we'll see if we get the cross to the downside. That would be trigger 1, and then we want to see trigger 2. And if we get trigger 2, then we would see the movement. Then we would like to see the movement, I beg your pardon. We would like to see the movement to the 20 minus areas, which is effectively the lower quintile, and that would be the momentum build-up that is needed for a swing to the downside. Naren just asking what are the values of the moving averages. So these are exponential moving averages. The greenies are 5 exponential, and the oranges are 10 exponential. So 5, 10. Naren. Again, I wouldn't suggest that 5, 10 are magic numbers. It's just the ones that I have used, and they work pretty well for me. All right, so if we're getting this kind of downward, potential downward shift in the US dollar, let's just see what's happening on Euro side. And it's encouraging to see, remember that the froth on the real rate has dissipated somewhat. And the Euro has moved back into, well, not back, it's more more obvious that it's a zone 1 position. You can see that it is showing a positive RSI, and here we got the cross, trigger 1. We've still got to see trigger 2. Okay, and then if we get trigger 2, so both of the triggers pulled, then we want to see the movement into the upper quintile, and if we get a movement into the upper quintile and it holds, then we've got a potential swing going on there. What's the key driver? Key driver, that core PCE number. If it comes in hotter than expected, that's going to probably stop the impulse move here on the euro, because dollar should increase then. But if it shows moderation, a continued moderation of inflation, we should see the euro moving higher. Okay, so we've just going to watch the crosses. Let's take a look at a few of the others. Let's go through to cable. Okay, so cable's a little bit different because there was some news out this morning. Retail sales came out this morning for UK. They actually came in much hotter than expected. Came in at 1.3%, and it was expected to be 0.4%. So retail sales month to month did have did see a spark up in the cable pairing. It's a different setup here. Cables actually started moving yesterday, so it's moved back into towards zone 1. We put in this trend line yesterday to see if there was going to be a definitive break to the downside. So the idea here is that there wasn't a definitive break to the downside. It's popped back up, and we've got cable moving back into zone 1. It probably, in my opinion, needs to establish further in zone 1 before it really becomes an acceptable sort of candidate. It did move yesterday, right? And then you can see that it did go into the upper quintile, and it did hold. So the question here is quintile equals 5. So how's the range divided into 5? Well, it's 100. It's 0 to 100 divided by 5 is 20s. So this is 80 and 100. So this is the upper quintile. Okay, 20 and below is the lower quintile, right? Understand that, James? So we've divided it into quintiles. One quintile, there's five quintiles here. 5 quintiles. The top quintile is 80 to 100. Okay. So the idea here is, I think cable is looking interesting. I think I'd like to see it just more substantial occupation, so to speak, of zone 1. You know, because it did fall out somewhat. All right. Let us go through to gold. Let's just see what's happening on the gold side. Then I want to take a look at the risk side of the markets. We might look at oil, actually. We haven't looked at oil for a while. All right, so gold. It's gone back into zone 1. The RSI nicely above 50. I will go to the weekly here. Go through to the weekly here, right? So 1, 2, 2, 3. See the trend here? 1, 2, 2, 3. Now we've got an important part to analyze. Is this the next 1, 2? Now the way we're going to be looking at that is using a reference candle reversal, right? And so what we've got here is, here's the reference candle. That's and on each side we've got a higher low. That's condition 1. Condition 2, price taking out the reference candles high. We've got that. We've got that. But condition 3, and the most important condition, without this we've got nothing. It's got to close above the reference candles high. So if gold pushes up today and closes above this green horizontal, then we've potentially got the next higher trough, and it looks as if gold is going to be sitting up for the next leg higher. That would be encouraged if there is a moderation in the inflation number that comes out today. It would be encouraged if dollar gets pulled down by that inflation number today. The fact of the matter is we have moved nicely into zone 1, and we want to just take a look and see if there is some sort of signals here. So this is interesting. I just want to get rid of this. I want to get rid of this. So we've got the 5-hour exponential moving average nicely above the 10-hour exponential moving average. So there is trigger 1, but we potentially got another option. We got probably a second leg here. In other words, the stochastic crosses over and crosses over upwards and moves back into that upper quintile. And if it holds that upper quintile, then we potentially get that swing. So that's looking quite encouraging. Okay. And now James has got it. So a lower PCE today should draw you as down. So take a look, James, at the PCE. Look at the core PCE. Okay. And take a look at what is expected in terms of the number. So the I'm just trying to get my calendar up here. Core PCE month on month is expected to come out at 0.2%. Let's just say we get a 0.1% there. I think that would maybe encourage some sort of movement up in gold here. PCE, very important question. Mia's asking, what is PCE? PCE is effectively I've gone blank. It is the preferred inflation in reading of the the Fed. CPI is consumption price index, consumption price index. It's a measure of inflation. It's not really what the Fed looks at. The Fed looks at PCE, which is personal consumption expenditure. I think that's what it's subject to correction. Personal consumption expenditure. It's calculated differently near to CPI. CPI is a basket of goods. PCE is more driven by surveys and the Fed is looking at the PCE to assess if it is meeting if it's meeting its inflation target of 2%. Coming out 3:30 today at 3:30 today ZA, 1:30 today UK. So and inflation is what's driving the real rate. Real rate is a key driver of our markets, so it's a very important piece of the puzzle. Does that help me? Let me know. So I think if it comes down and moderates, we potentially get the cross up here in stochastic and hopefully get some sort of a swing going. But there is a caveat. There is a caveat. Okay, there is a caveat. The caveat is that the CPI and PCI are very closely correlated. The caveat is that the CPI was showing stickiness. So if that's going to be reflected in the PCE, that's going to be interesting. So inflation, no, if inflation is down, US dollar comes down. Okay. All right, let's just take a look at Raj saying subject to PCE. We'll see if we have a risk on day. Yeah, let's just take a look at DAX first, and then I want to take a look at, we said oil. Okay, so let's do oil next, DAX, and then take a look at the S&P. So let's go oil first. So I'll just bring up UK oil. UK energy is an important factor in determining inflation, not so much on the core level, but on what we call the headline level. It's interesting, we are down. Okay, we are down in terms of the trend. Okay, this is not a lower peak question mark anymore. We can actually take the question mark out. This is a lower peak, and this is a lower trough here. Okay. But what's interesting is it has driven up just over the last week. We are perhaps looking at the next lower peak here. Okay, so we'll just keep an eye on that. It's a little difficult, I think, to get your head around oil at the moment because there's not really a synchronization between the weekly and the daily. See, the daily is moved in one, the weekly is still down. So I'm looking to see if we get like some sort of lower peak here. So this is quite a tricky chart. So possibly one just to keep an eye on at the moment. I'm not sure you want to get involved with it. Let's just see how it runs. It is in the upper quintile. Well, if we're running in the upper quintile, it's and it sticks here, then oil's going to be running hot. Okay, we said DAX next, so let's just bring up DAX. All right, so I'm starting to like the DAX again. When I say, I think this is a really interesting chart. What I didn't like about the DAX was on the daily chart, and on the daily chart we had the overbought condition. We've normalized here. That's encouraging. We've normalized here. I really didn't like this overbought condition. Buying in overbought conditions carries risk. Shorting in oversold conditions carries risk. Okay, so and you don't know when the overbought, oversold conditions are going to resolve, but they will at some stage resolve. So here they've resolved. So that's encouraging. The fact that we are above the resistance here, the fact that this RSI is above 50, the fact that we have resolved the overbought condition, I would be looking to see if we can get some sort of movement up in the year-end rally. So again, some crosses to the upside in terms of our triggers. Nothing's really going to happen until we get into the upper quintile, the 80 plus level, and hold. Okay, so we've got to go above 80 and hold. That's the key here. But the fact that we moderated in terms of that overbought condition, encouraging. And last but not least, let's go through the S&P 500. So the US indices, US index, US stock market. We'll just use the S&P 500 as the proxy to give us an idea of what's happening there. I'm just waiting for. See, it's not as comfortable as the DAX. We still overbought here. Is just not as comfortable as the DAX. So I would shift sort of. I'd shift priorities on the watch list more to DAX side because of the fact that we're not overbought. However, having said that, they are going to be correlated somewhat. I just am worried that there is going to be some sort of profit taking here. And we're going into a very quiet week, which is perhaps going to distort the technicals because liquidity really sort of compresses in the next week. I just would like to see this move here. Okay, so S&P 500, just a little tricky at the moment. All right, are there any questions? Any other questions at the moment? Thank you, Kobus, and I want to wish everyone a very good holiday period. And if you celebrate, celebrate well. And we shall see each other then on the other side. So thank you very much, guys, and have a fantastic festive season. All right. Cheers, guys.